And joining us now to discuss is Noelle Acheson, Head of Market Insights at Genesis Global Trading, a CoinDesk sister company. Hello there, Noelle. So, Bitcoin's new all-time high reached over 68,500. ETH also making an all-time high over $4,800 just hours after that Bitcoin all-time high. What's behind this push?
That's a very exciting question, Christine, and thanks very much for having me. I do have to clarify that these are my opinions, not those of my employer, and nothing I say is investment advice. But as to what's driving Bitcoin, while it may seem like a short-term phenomenon, Christine, it's actually a combination of factors that we've been keeping an eye on for a while. We have the favorable macro environment with inflation expectations becoming more deeply entrenched. Tomorrow we have the US October CPI headline figure, which is expected to produce the highest print since 1990. And all of this is against a backdrop in which it is increasingly harder for central banks to raise interest rates. Also, we have the imminent Taproot upgrade, which is going to make Bitcoin smart contracts more flexible. It's going to make transaction types more private, and also lower transaction fees, all of which should boost Bitcoin adoption. We have the continuing expansion of mainstream awareness. I mean, just last week, Christine, we saw mayors of key U.S. cities committing to taking part of their pay in Bitcoin. That was just mind-blowing. We also have on-chain data, some of which you already mentioned, that show that we have increasing activity on-chain against a backdrop of declining available liquid supply. And finally, Christine, and this is quite important, we have a healthier market than last time we were at these levels with lower leverage throughout.
Wow. Does it feel at all like 2017, though? Because it does a little for me in the sense that the ICO boom feels like what we're seeing with the NFT boom right now. Then regulation came hammering down and we had a crypto winter. Are there any headwinds ahead for Bitcoin?
That's a fair observation. And in with the NFT boom, I'll throw in some of the meme coins. I mean, just the action that we've been seeing in Shiba Inu recently is quite spectacular. And also, like 2017, we're seeing Coinbase yet again #1 on the iOS App Store. So there are signs of some retail froth, but this is very, very different from 2017. On the one hand, we have institutional interest that we didn't really have back then. We have a professional market structure that we didn't really have back then. We have greater regulatory clarity, which is a much more favorable environment for institutional money to come in. And more importantly, we have the awareness that we've already mentioned. We have people that are much more aware of not only Bitcoin, but of Ethereum, of NFTs, or some of the potential of this technology. And finally, I think this is one of the key aspects to what's going on in the market across all assets, Christine, is the technological progress. The Taproot upgrade is just one example on Bitcoin. We have the pending merge, the imminent merge for ETH 2.0. We have strong growth on some of the other layer ones, such as Solana and Avalanche. It's the technological growth that people are embracing, are developing on, and are accepting more on a mainstream basis that makes this very, very different from 2017 and much more exciting, to be honest, even though 2017 was quite dramatic also.
I'd like to hear your assessment as well as differences in trading geographically, because the all-time high was reached during Asia day trading hours. Do you see any differences in trends between Asia, Europe, and North America?
Nothing particularly clear. We have seen some instances, you probably saw the same Chainalysis report that I saw that says that many of the European institutions are going DeFi first rather than piling into Bitcoin. That's largely to do with the different investing culture that we have over here, and I'm speaking to you from Europe. But the difference between Asia and US hours, yes, there is some sentiment change, and there's also a different attitude towards leverage in the derivatives markets. But I think this last one was actually largely due to timing.
Mm-hmm. And do you have a sense of whether or not this push is retail-driven versus institutional?
That's a very good question. It feels still more institutional than retail. Yes, we are seeing some retail activity creep back into the market, but on the whole, it still feels very institutional, not just from the activity that we're seeing in the derivatives markets, but also some of the on-chain activity with some of the smaller transactions. They're ticking up, but it's the larger transactions that are still predominant. One statistic to keep an eye on is the ranking of CME Bitcoin futures in the overall Bitcoin futures open interest. Until recently, it was number one in terms of all of the leading derivatives exchanges, largely because of the ETF interest. But it's no longer number one, still number two, which says institutional interest is still strong.
Mm-hmm. And just for the end of the year, any favorite indicators to get any sense of any short-term movement from here on out?
Well, the price, obviously, because many investors are momentum changers. And one thing that an all-time high does is bring a lot of awareness to the industry. So definitely the price, but also I'll be keeping an eye on the active wallets. That's a metric that I personally enjoy watching because it speaks to activity, it speaks to new investors coming in, and it speaks to adoption, which in the end, in the long run, is what is going to drive Bitcoin value.